FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and the date is 10/3/19. Well, you've been watching gold. They smacked it down. It was down to almost 1460 at an intraday level, back up over 1500, trading at 1508 on the ounce. Silver, 1758 on the bid. Well, you can put somebody down, but you can't keep them down. Proof that perhaps the central banks really are losing it. Well, if you've been watching what's going on TV, the political situation, hard not to lose it yourself. But here with us now is our good friend John Grace, and you find him at ybpoor.com. John, impeachment. I mean, that's all these people know how to say, it seems, huh?
Absolutely, Kerry. That's the new watchword, right?
Yeah. Well, it was always Mad Max's watchword, and it just took a while for the rest of the party to catch up with her, huh?
Well, yeah. I mean, maybe we're all waking up a little bit to see that the emperor has no clothes, and the emperor, I'm not sure if there's a brain or a heart, frankly. So it's an unusual place for the president to be.
Yeah. Yeah, well, hey, so what's going to happen? Obviously, they're not going to impeach him. That's a virtual impossibility, but they sure are making a lot of noise, huh?
Well, and I mean, let's go back and look at Richard Nixon, right? I'm not a crook, right? He convinced a lot of people that was true until they changed their minds, and that took a little bit, like a year, if I'm not mistaken, for more folks to get on that bandwagon than were there before, and then the rest, of course, became history. So I don't know. What did Yogi Berra say? It's like deja vu all over again.
Yeah, well, there's a little difference there, and the difference there was that those people who were pursuing Nixon actually had a brain. These people,
he did. I
these
agree.
people, and the people, even the people who are running for president now, made McGovern look like a very talented, able politician. These people, it's a miracle they can get out of bed. I mean, I said before, I don't think that very many of them are really fit to even wash the toilets in Trump Tower.
Okay.
They're just a bunch of losers here, and the field is rapidly narrowing, both through scandal and health and scandalous health. Bernie is probably out of it now. Biden will, if he's not out, he might be out, but he's probably the only one that doesn't realize it now. So we're left with Pocahontas. So, you can't make this stuff up, John.
No, it's we got to pay attention, and that's probably what's worth waking up in the morning just to see which way are we going, because the winds certainly blow in a lot of directions almost simultaneously.
Yeah, that's for sure. So what about the markets, though? What's going on? The U.S. growth might be slowing down, but like we say about the U.S. dollar, it's the Taj Mahal of Baltimore.
Well, I agreed. I mean, if we look at 2008, that's exactly what happened. That's where the flight of capital took place to the U.S. dollar. But as far as the stock market's concerned, that's a whole different ball of wax. And what we've been saying is at the highs, we've actually been in a flat market, Kerry, for about 2 years.
Yes.
And we have not gotten beyond 27,300 on the Dow. And each time we've reached that height, or that, I'm not sure it's a top, but we'll say that height, we seem to go backwards. I mean, I think we got down to 24,000 in March of 18, December of 18, I think it was 22,000. So we've been saying, don't be surprised to see that we get to 20,000, and from 27.3 to 20, that's like a 27% decline. We're preparing our clients for that kind of scenario. No different, or not much different than where we were a year ago, where, fourth quarter, September 21st, I believe, till Christmas Eve, markets were off 21%. Our clients were off 6 or 7%. So we want to make sure folks can recognize there are some steps that you can take where you can watch the market, but you don't have to watch your money go down like the Titanic.
Mm-hmm. Agreed. So you need to be defensive, you're saying, at this point? Has all the money been made in the market? Is that what it comes down to, or can it still go higher?
Well, notice. I mean, look, this is fall, right? So we love football, right? Here in this side of the pond. And notice every team, without exception, has what on their basic teams? 11 players on offense, 11 players on defense. When it comes to investing, who thinks like that? Most of it's we've got all of our players, all of our vehicles. They're all on offense. We have no defensive strategy. And we recognize, at least when it comes to watching sports, that a good defense is often a strong offense, right? But we don't have any kind of defensive mechanisms in the equation to keep the losses limited. So as I say, we're off what we've seen 50% declines in the same decade. Really? Could that happen again? Could it be 3? I don't know. But if you're prepared, it doesn't much matter. Most folks, I'm afraid, are just not prepared.
Yeah, well, an ounce of preparation is worth a pound of cure, as they say, right, John?
Bingo.
Yeah, so preparing for the inevitable, some people buy burial insurance, and some people say, the hell with it, I'm just going to let my heirs worry about it then. So you're saying,
right? Or when we see the floods coming, some people say, I'm going to write it out. And I'm like, are you out of your mind? I'm following the animals. They know to go to higher ground. You want to stay here in the lowlands and let the sea come take you away and float you out to the Bahamas? Be my guest. But no, I'm following as many of the smart kind of leaders, if you will, as I can to survive, because I'd like to be able to tell my own story.
Yeah. So better to be a live coward than a dead hero, huh?
Correcto. Yeah. Be on the news as opposed to in the news. Okay. Yeah. I don't want you talking about me. I'd like to tell my own story. Thank you.
Right. So, but, all of this, not easy to effectuate. Do you ever anticipate that being in cash, being in the U.S. dollar is going to be risky?
I don't at this time. No, I don't. I think the dollar will continue to survive. It's the world's currency. And by the way, when we act like, we're kind of victims and all these other countries have taken advantage of us, we do not recognize nor appreciate how many advantages we have by virtue of everything like oil traded in U.S. dollars. Okay. And notice that when foreign countries and the wealthy from other countries they buy what? In U.S. dollars. So just as far as gasoline alone is concerned, look at the price in Europe, look at the price in America. A lot of that has to do with the fact that we're trading in U.S. dollars, and it's an absolutely huge advantage.
Yeah, certainly is that. So, we got the advantage, although, oil, if you listen to these, people about electric vehicles, it's going to diminish over time. But what do you think of EVs? Are they going to take 10, 15 years to sweep the world?
Yeah, it seems like, let's see if I can remember the cycle. It often, once there's like telephones, right? It takes maybe 10 years for 10% of the population to be the forward-leaning type, and then about 7 years it goes to like 90% of the population. So it'll be interesting to see how long it takes. But I think we're all going to have to recognize that it's just it's a smarter play. And I love the V8 engine, right? But the electric it works. I mean, they go like gangbusters, and I don't have to stop for gas. So we'll all be driving those EVs.
You got to stop for a charge, and then you got to keep stopping for a charge, and it's 45 minutes. But the thing is so smart that it tells you, based on your driving, where you're going to need to stop, how long you're going to be there, whether there's any other cars there, and at the supercharger. It's really the marriage of that electromechanical revolution that took place in the Industrial Revolution with AI and with high tech, with computers. The product it's a real case of synergy where the product is really greater than the parts. I didn't really believe it until the Model 3. Being able to produce hundreds of thousands of vehicles for a new company post World War II, it's unheard of. Hasn't been done. Even World War II wasn't done much. I mean, that is, I don't know if people really recognize how monumental that accomplishment is. And we're just getting started with battery technology, et cetera. Eventually, I go back, my father used to tell me stories when oil first started being refined. All they wanted was kerosene because that's what kept the lights on effectively. You had kerosene lamps in the house. Not a real safe thing, right. Not a real clean alternative. They were definitely not very green back then in the 1880s. But gasoline was a natural byproduct of kerosene, and they had no use for it. And they used to just dump the gasoline in the river in New Jersey, Cleveland, other places, Philadelphia, dump it in the bay, and probably didn't do the ecology of the day any better. But, this is proof that pollution is waste. It's a perfect example. And as technology evolves, it keeps wringing the waste out of the system. So I wonder if we'll be dumping gasoline again.
Sorry.
I just wonder.
And I mean, we got out of cars primarily because of what pollution, mostly horse pollution, right? It's all over the place.
Yeah, on the bottom of your feet.
Or we got into cars from horses, right, because of horse pollution.
Yes.
So each advancement is a solid one, and we're moving forward, even though sometimes it feels like we're going backwards.
Yeah, sometimes it's slow. You can't. These things follow their own pace, right? Their own time of conversion,
their own rhythm,
adaptation. Yeah, their own rhythm, exactly. And it just takes its own time. And the fact that there's such a huge number of vehicles, installed vehicle base now, really makes a big difference. That's part of the reason it's going to take so much time. And the infrastructure. There's 1,400 superchargers in the United States now. There might be 1,100 stations, 14,000 superchargers at those stations. So, but, hey, it's a lot easier to go charge your car up than to go in the gas station and you got to play gas jockey, filling your car up.
Right.
So, the future's bright, but we have to get to that future in the meantime. And, Tesla could be gone. If the market really melts down, which is possible, how's a Tesla going to survive?
FSN Radio. It's all about what's next.
Today's show is brought to you by U.S. Gold Corp. U.S. Gold Corp is a U.S.-focused gold exploration and development company advancing high-potential projects in Wyoming and Nevada. U.S. Gold Corp has consolidated a district on Nevada's productive Cortex trend and is advancing the Copper King project towards production in Wyoming, led by a team of prolific company builders and renowned explorers, including Dave Mathewson, who is directly responsible for several major Nevada gold discoveries. U.S. Gold Corp is well capitalized and has an extremely tight share structure with less than 20 million shares outstanding and trades on the NASDAQ, a major exchange under the ticker symbol USAU. To learn more, go to usgoldcorp.gold. That's usgoldcorp.gold.
The Financial Survival Network. It's all about what's next.
It very well could be gone. Well, who knows? But certainly we have a champion. This guy he's all in, and I appreciate that. I'm glad. And by the way, he happens to be an immigrant, so which we need more of.
Of the right ones,
I'm glad to
agree.
see that he has that that kind of passion.
Yeah, he's not collecting welfare, so we need to be grateful for that. He's a productive immigrant, and so it's hard to have open immigration when you have a welfare state. And, it's things have got to change in the way that we're doing things. So getting back markets, you think, that 27,300, that's become resistance, right? And
correcto on the upside.
Right. On the upside. That's a cap effectively. Would it surprise you if we break 27.3 and go up to 28 and 29,000?
It would not surprise me, and that's why I like using the analogy of the football players, right? Because it's something everybody understands. So we all like the good news. We all like to make money, and we just hope that we, make money on everything we own, and then we go to heaven. Unfortunately, savvy investors hate losses more than they love gains. So it could break to the upside. I don't see that happening right now, but that's why we want to be able to, in a tennis analogy, you have to play both sides of the net, don't you? Or volleyball.
Yes.
No matter where the sun is, no matter what the wind is doing, okay, no matter what nature is doing or your opponent, you get to play both sides of the net. So we have to have positions that can move into risk assets when the market's good, like 2009, but in like 2008, we want to move out of risk assets into cash and alternatives to limit the losses to, let's say, 20% or less, and those are real numbers, as compared to the market off 37, many good old mutual funds, ETFs off 40, some even more than 40%. If we could limit it at 20, we only need a 25% gain. If it becomes the case that we're down 60% from whether it's market losses or a combination of withdrawals, now we need about 150, 160% gain, something like that, just to get back to even. I mean, I like the odds at 20. I'm afraid of the odds once we move past 40% on those losses.
Yeah. Yeah. Well, and it's like catching a falling knife, right? So,
yeah.
So defensiveness, but this bull market, which has been going on for 10 years, and that's another thing, it's definitely getting long in the tooth. Really, nobody believed it's the least loved bull market probably in history, isn't it?
Yeah, I think that's true. But to understand, part of the reason I think that is true, Gary, is the markets and real estate, assets where the wealthy folks have enjoyed all of this appreciation has been primarily because of all this cheap money for so very, very long. Mm-hmm. And, cheap money is good, but notice how with the travel agency, Thomas Cook, only been around since 1840, and out of the blue, they folded, kind of like Lehman Brothers, 1850. And in both cases, what was the problem? It was debt. And what I'm saying to you is that I think is the problem for most of us.
Yes.
And in the case of Thomas Cook, I think it was $21 billion worth of debt. So what I'm looking at right now, consumers are doing something similar, where the average consumer has more debt today than we did in 2008. So I'm afraid when it comes to learning from the financial crisis, many of us have not learned squat.
Yeah. Yeah. Well, that old saying, the only thing we learn from history is that we don't learn from history, right?
This is true. Hey, can I touch on, I do have some steps, Gary, that I can share, 7 ways to help recession-proof your finances so that you might be able to withstand whatever the winds might be.
Love to hear it. Sure.
Okay. All right. So number 1 would be, pay off the debt, pay down the debt. Please don't take on any more debt. That's kind of what we're looking at. Thomas Cook and by the way, Lehman Brothers had a similar story. I think it was 600 billion under management, and about the same number in terms of debt. Mm-hmm. And they became more of a hedge fund than an investment bank. So pay down the debt. Don't add any debt, because you're taking current money and making those payments, and effectively it's promised as far as the future is concerned until you get out of that debt. But most of us have been adding on. Increase emergency savings. That's number 2. Number 3 is a hard one, but it's one that it helps for people to aspire to and work around. Spend only 80% of what you earn, not 100, not 110. Save 20% of what you earn first month, every month, for the next 20, 30 years, and you'll probably have a chance to prepare for making work optional, regardless of how the economy might be. Look at the financial goals for life after your last paycheck. There's an interesting study that suggested just last month that 6 out of 10 Americans believe $1 million is enough to retire on. Well, maybe it is, maybe it isn't. But the real question is, what do you need? It's kind of like taking a trip. That you have to do. So run the numbers. I know it's math. It's a 4-letter word, but you can use it and you can do it and figure out what you need when you receive your last paycheck, so that here's what I can expect for the next 20, 30 years without having to go to work. And that way, I take a lot of the guess and I think a lot of the stress out of the equation.
Yeah.
Number 5 is life insurance. Now, this is something that I find very interesting, primarily because the way most of us go about the job, Carrie, is we say, well, this is what I can afford. That's not the question. The question is, what are you trying to cover? So if it is the case, let's say that one breadwinner is making $80,000 a year and the other one is making $40,000 a year for a household income of $120, it means that the survivor for the person who is making 80, you want $2 million on that person. So you know at 4%, there's 80 grand. I'll miss you. I won't miss your money. I'm good. And the other one with the $40,000 need needs $1 million. 4% gives you 40. Mm-hmm. Again, you can see that all I have to do is present a death certificate and put this money to work, or maybe the returns are 5, 6, 7, and the withdrawals are 3 or 4. Let's stay at 4. But that way I know I put this to work, 4% withdrawal. Again, I'm going to miss the person that was making that money, but I'm not going to miss their money. That's important because death is always premature. Yeah. And number 6, determine in advance how much loss you can accept. This is something that most investors did not know they could do, but there is technology that helps folks really see for themselves, no matter what the market does, what kind of loss can you live with so that you can sleep at night, you don't pull out your hair. And then number 7 is see how you can design your portfolio to perform within your loss parameters. Because if the market's off, whatever it is, but like we were just talking about last fourth quarter 2018, if you're off 6 when the market's off 20, you can breathe. You can see, because I can probably recover from that. But if it's how low can we go and the 20 is accelerating, like you say, that falling knife, you just can't catch it.
Yeah. Yep. That's very true. Truer words never spoken. I guess people can find that at your website as well. Take a closer look at it.
Yes, and absolutely.
What's that site again?
Why Be Poor? Just 3 words, WHYDEPOOR.com.
Okay, not POUR, right?
Correct.
All right. Hey, well, as always, there'll be a link to it in the show notes to the interview. Really appreciate you coming on, John. As always, hey, questions or comments, how much loss can you sustain? Just email us, kl@kerrylutz.com, Twitter feed at Kerry Lutz, Facebook page, Financial Survival Network, and take a look at our site, Financial Survival Network, and sign up for the newsletter. Love to hear from you. Anyway, John, it's been great speaking with you. We'll talk to you again real soon.
Always a pleasure. Look forward to next time, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.